What's the best way to make huge profits in 2025? Is through acquiring distressed commercial real estate. But most people, even professionals, don't know how to go about doing this. So in today's video, I'm gonna break down 3 ways how to efficiently acquire distressed commercial real estate to really boost your portfolio. Now, most people don't know how to do this because this is kind of a lost art. In the last 10 years or so, there has not been a lot of distress. There has been slowly but surely over the last year to 2 years, an increase in defaults, an increase in distress situations. In 2025, we are seeing already in the beginning of January, and we're expected to see a lot of distressed activity in the market that we probably haven't seen since the Great Recession. So when I say most people don't know how to go after it, it's because they haven't done it before or they haven't worked through it before. And it's not like just opening up the LoopNet or CoStar and just saying, hey, here's a distressed deal. Back in the day, there was a lot of opportunities like that. Most of these opportunities are not gonna hit the open market. So the first thing you gotta do is you gotta be able to find properties before they hit the market, and you have to have an efficient way to be able to do that. And being in default is not the only element of distress. Here's what I mean by that. So when the property goes into technical default, lender files notice of default. Here in California, they're gonna file notice of default, 90-day period. After that, then they have the ability to file notice of trustee sale, and then they can auction off the property, right? However, a lot of properties are in distress, but they're not necessarily in default. For instance, if the loan is a CMBS, commercial mortgage-backed securities loan, they may be information that show you CMBS loans that are in technical default, but they're not necessarily in actual default, meaning the lender has not filed a notice of default. And as a matter of fact, there's a lot of these. If you look and see what's in technical default and what's in actual default in any market, the technical default number is gonna be higher than the actual default number, meaning that the banks are trying to work things out. And I say banks, but lenders, banks, funds, they're trying to work things out before they take the property back. So at some point though, the property's gonna have to go back. So if you can figure out which properties are in actual default and technical default prior to them getting on the market, that's the best time to be able to strike a deal. So we as brokers and investors, we use different systems that we use to identify these opportunities. But then what we do? We do the dirty work. We call the people. I know that's like a curse word in the internet age, but actually cold calling people is one of the greatest ways to talk to people who are in this. You know, you can send mail, you can do different type of marketing, but reaching out and calling people is kind of what we do. So if you don't do that, what you need to do is align yourself with someone or some firm or some organization that does do that. But also making sure that you build your connections in the industry, you talk to people in the lending world, because these are the people who have the deals. A lot of times, some of the lenders actually will sell the note before they go through the foreclosure. In fact, a lot of lenders would like to do that. So you have to have connections. The key to doing these kind of deals is you have to hit it before the market. Here's a couple of ideas. You could do you cold calls yourself, direct mails yourself, call the lenders, but really, you really need to have a brokers or brokerage team or some professionals that you work with that have their feet to the street so that you can see these deals before they get to Craigslist, before they get to the CoStar and LoopNet, right? The next thing you need to do to make sure you close a distressed CRE is you need to solve a problem. You need to solve a problem. This point is twofold. Solve a problem, and then you need to make sure that you buy it right? First part is solve a problem. All right, what is the problem? 9 times out of 10, the borrower can't make the payment. Now that could be like if it's an office building, obviously we have a huge shift in the office market, right? Certain apartment buildings here in California, we had a big eviction moratorium. So for a period of time, certain cities in the state of California was not allowing landlords to evict people for not paying their rent. I know it sounds crazy, but that's what it was. So there's a lot of people, especially I'm in Oakland, San Francisco, there's a lot of landlords that's hurting in that situation, right? And then, and this is what's big in 2025, a lot of loans are coming due. Meaning that, hey, this was a 3-year loan, it was a 5-year loan, whatever it was, and now it's due this year, right? And a lot of loans were originated in 2021, 2022, and they're now due. So these are the issues. So you gotta be able to solve a problem. And I say first solve a problem, meaning that if you buy an office building that has a big vacancy and you can buy it at a discount, just buying it at a discount is not solving the problem. Solving the problem is figuring out how you're gonna occupy and re-tenant that property. And there's probably many different ways you can do this, but you kind of need to think about that going in. Because we're not just talking about buying the properties, we're talking about buying it and making a profit. So you have to solve that problem. Obviously in multifamily properties, it's a little bit easier because it's easier to rent out, but you don't want to just buy a problem and not have a solution for it. So you have to figure out how do we solve this, right? In San Francisco, for instance, a lot of offices went vacant, and what some people are doing is putting life science companies within those offices, or they're reconfiguring the office space to have a smaller suites, if you will, because a lot, people are going back to the office slowly but surely, and they're doing it in San Francisco. I can see it. You just walking around, moving around. Oakland is taking a little bit longer, but employers are not taking 20,000, 30,000 square feet. They're taking smaller square footages. So if you could take a big office building that's got maybe a 10,000 square foot floor plan and maybe break it down to smaller floor plan, you might have more success in renting those units out. A lot of people have tried to kind of convert office to multifamily. That's, I'm not an expert on that, but that one's a little bit tougher. But solve a problem. If you got a bunch of vacancies in your apartment building, you might have to offer rental concessions. This could be first month free. And I think in a rent control market, you are better off offering concessions like first month free, low deposit, move-in special versus dropping the rent. Because if you're in rent control, it's very hard to get that rent back up. So if you can offer them a way to move into the unit with less money out of pocket, that may be more valuable to them than a lower rent. And it's definitely more valuable to you because if you can't raise the rent, then you need to keep the rent as high as it could. So move-in specials. Just a couple ideas how you can solve the problem. Now, financially, look, seller, they may have a mortgage that's on their back. They may be looking at losing a lot of money, but if this thing goes to foreclosure, it can get worse. They can lose all the money. They could potentially get sued if it's a judicial foreclosure, and it can make a bad situation worse, wherein maybe you can get them some of their money, solve some of the problems, take the monkey off their back. If it's a lender, they may be looking at losing money, but they don't want to own the property 9 times out of 10. They don't want to own the property. So if you can maybe have them take a loss, but it's not a crazy loss, they can justify it, but they don't have to put the property on their books. They don't have to take ownership. That's a problem you can solve for them. So you have to make sure you solve a problem. I want to just say that because a lot of people think you can just make lowball offers and get deals done and make money. And even if you buy that property at a lowball number, you have to solve the problem, right? The flip side of that is you got to buy it right within that process, meaning that not just cheaply, but you got to buy it with the right financing, you got to buy it with the right terms, you got to buy it in a way that will generate the returns, the alpha that you're looking for, knowing that you have to roll your sleeves up and do some work. And you got to do that in a way where you can present that to the seller where it makes sense for them as well. You can't just come in with crazy low ball. All right, that's important. The last thing I would say is this. You have to be prepared. You see a great deal, off market, checks all the boxes. You know you can solve a problem. You know you can buy it right. You cannot be waiting around to get qualified with a lender. You cannot be waiting around to get your investor capital together. Because if you do, you will lose that deal to somebody who was prepared. You have to start preparing now, even before you see that great deal. Because when you see that great deal, if you don't have all your ducks in a row, it's too late. Because there's a whole bunch of people out here hunting for these great deals and they are ready to make an offer. If you see a great deal, you can't wait 2 or 3 weeks to make an offer and evaluate it, think about it. Nah, you gotta be on it. You gotta be on it quick. You gotta make it happen fast and you gotta get to it. So spend your time in the early parts of this year getting all your ducks in a row, whether it's brokerage relations, lending relations, investor capital, investment criteria, so that when you see the great opportunities, you can strike. I hope this helps. If it does, like, subscribe, share. To the next video. Peace.